folks, and welcome to this video. It pleases me to announce the release of the Pipnotic Currency Strength Reversion Expert Advisor. The Expert Advisor is an automated trading robot that trades currency strength. So it's looking at time series data in real time, and it's calculating some entry signals that it uses to buy and sell pretty much any currency that you tell it to. I've currently limited it to the 9 most traded currencies, and we'll leave it at that for the time being because that's a boatload and we don't want to go overboard. So what it's doing, as I mentioned in the previous video, is it's looking at whatever time frames you specify in the configuration, and it's looking for these entry signals. So these can be signals that can be leveraged, can be capitalized on, that last, for example, open trades that can last minutes, but it can also open trades that can last several days, weeks, or months. Okay, so it's a very interesting tool. It's a very powerful tool. I've been using it for a long time, and I think it's a tremendous way to interact with the market. It's actually, I consider it a proxy between myself and the currency market. It's analyzing something that's quite difficult to grasp unless you're working with currency strength. If you look at one currency pair, you're not really seeing what's actually going on with those two currencies. You're only seeing what's going with those two currencies relative to one another. But when you're looking at each currency relative to a basket of other currencies, well, then you're seeing an amazing amount of data. Okay, this is a very profound piece of data that you can then make trading decisions on. And so I wrote this piece of software initially as a tool to help me identify the best configuration options for the histogram and the GFX software. And so I figured, why not turn it into a fully automated trading robot and see how that goes. And while I say fully automated, it's not fully automated, because I advise people who are using it to hold it by the hand and use it more as an educational utility more than an automated trading robot. The beauty of it is that it really enables us to engage in the market in a very different way than we otherwise would, because it's looking at extreme deviations from a mean, and it's capitalizing on price for these different currencies, these deviating currencies returning back to the mean. Okay, and so it works very well out of session. It works very well during the Asian session. It works very well after the United States session closes, but I'd be very careful about using it during the London session unless you know what you're doing. It can be used at the London lunch, so when London town goes for lunch, then you can tell it to trade only the British pound or British pound currency crosses, and then it can work very, very well, but you might want to be a little bit careful. Okay, you can use it on the 1 minute chart, and you can use it all the way up to the monthly chart. It's completely up to you. But when you're using it on the 1 minute, the 5 minute, the 15, the 30-minute chart, you really have to be very careful, because things move very, very quickly down there. If you're using on the 1 hour and even the 4 hour and up, well, then you can take more of a backseat approach. There's very, very limited stress. You can let the robot do what it wants to do, and you can react to it slower, in contrast to the 1 minute chart, where you have to be in front of the computer so that you can consider what the robot is doing. You also have to use it to get in and out of trades on these very, very small time frames. This I don't enjoy. I prefer to take the back seat, but if you're one for a bit of action, then you can certainly use it on the 1 minute chart or the 5 minute chart, or whatever you choose. Okay, so I'm just going to show you the configuration that I like to use, just so that you have an understanding of one possible setup at least. So I have two charts in this profile. On the left side, I have the supply and demand software, and here I have the histogram below. Okay, so I have the price chart here, the supply and demand software, and below that I have the histogram. And then on the right side, I have the currency strength reversion expert running. Okay, on a completely blank chart. You can see it running just up here. And the configuration of this up here, the configuration here, matches the configuration of the histogram down here. It doesn't right now, because this needs to be set to 3. But now the configuration of the histogram is the same as the configuration of the EA. And this is what you want to happen, because this helps you visually see what's going on. Okay, so what I'm doing is I like to keep things, as I mentioned, I like to slow things down a little bit. So I like to look at the 4 hour, 1 hour to 4 hour and up to the monthly chart. Okay, so this is a really nice slow way to interact with the software. Okay, and so you enter your private key here, and then it starts to work based on the default configuration. The default configuration looks pretty much what you can see here. Okay, the first setting here is the seconds. This is the interval at which the algorithm is being executed. So I'm setting it to run every 10 seconds. So every 10 seconds it scans everything like a maniac and then sees if there are any entries. If there are, it opens a trace. If there are not, then it waits 10 seconds. Okay, and I've described all of these settings in the previous video, and if you wish, you can actually download a very detailed PDF from the Discord channel, so you can kind of read a little bit about what these settings do and how they can be used. But I'm just going to run through them again here in this video very briefly, just to give you a quick review. So we have the interval, we have the private key, we have the average, we have the strength here, and so we have a setting here which is enable look like average. This is a way to normalize the data to help massage the sudden spurts of volatility a little bit so they're not so visible in the data that we want to use. Okay, we're looking at a look back of 30. So we're comparing currency strength now with currency strength 30 periods ago. So this is giving us a pretty bleeding edge look at what the currencies are doing relative to one another. Okay, this is pretty fast. You can also increase this to 50 if you like, but I find between 30 and 50, this is just a nice window to be within. Then we have the mean data. Here we have mean periods. So this is used to calculate a mean, and this is looking at histogram data. So it's calculating a mean, an average of the histogram data, and then it's calculating a variance on that data. And then there's something called a modifier, and the modifier is a value that's used to modify the variance. And this is essentially where these buy and sell signals are identified, because we're identifying, here we have a lovely example where we had a sell signal taken by the robot on the Australian dollar Swiss franc. When price poked up into here, just around here on this first white candle here, we said we are likely going to go short. Why? Because we are moving up into those very extreme positive variance territories. Okay, so when it sees this, it says, okay, we're getting very high. Let's sell in anticipation that we revert to the mean, which is what we saw a very nice example of here. This is the 4-hour chart, by the way. Okay, so the default setting will look something like this. We have the entry time frames, and please be careful with these. You don't want to scan everything here and on every time frame. That's a little bit gunslinging. And so the default configuration will be from the monthly chart to the 1-hour chart. That's a lot. Okay, that's 1, 2, 3, 4. That's 5 time frames per currency pair. That's a lot. That's a ton. Okay, so if you want to do that, then maybe you want to increase the modifier to really scrutinize the trades, to really cherry pick the most beautiful trades. Okay. So the max time frame is the monthly, the minimum is, for example, 1 hour, but you can also go down to the 1 minute if you should choose to do so. You can also say, well, I only want the robot to trade on the current time frame. But then you would set both of them to current, and then it's only going to look at, for example, the 4-hour chart. And when I change it to the 1 minute chart, then it'll only trade the 1 minute chart. Okay, so just keep that in mind. But I like to keep it like this, because this kind of currency strength divergence it doesn't happen too much, and so it really slows things down. So I think you should be good to go if you leave it on the default settings there. Okay, then we have the trading window, and the trading window has a few settings, 2 settings that are important. The first one is the open time, and the open time corresponds to the time in your market watch. So here you are telling the robot when to start to look for trades. Okay, so let's see what it says. Default is 2100 hours. So 2100 hours on my platform is about 4 o'clock New York time. this should actually probably be around 2200 hours. That's better. So 2200 hours is 5 o'clock New York time. This is about the time that the New Yorkers start to go home. They start to kind of close the books and leave their desks and finish up for the day. So this is a really good time to consider trends reverting to the mean. Okay, and the window is 5 hours. So from 10 o'clock my server time and 5 hours forward, it's allowed to trade on Monday, Tuesday, Wednesday, Thursday, but not on Friday. We don't want to take trades on Friday. Why? Because trades that open on Friday and don't close on Friday, unless we're looking at the monthly and the weekly or the daily chart, these are exposed to what you'll call weekend spreading out. And spreading out simply means that out of session or out of market hours, the spreads on many instruments get very, very wide. And sometimes they get so wide that you get spread out of your position, where the spread gets so wide that you hit your stop. And this we want to avoid. So if you're taking trades from Monday to Thursday, then the likelihood of those trades being closed before the weekend is pretty high. Okay, so consider keeping this on false. If you're on the 1 minute or the 5 minute or the 15 or the smaller time frames, well, then you can probably get in and out of your positions within the same day. Then you can certainly enable this if you should choose to do so. Then we have the risk, which is the most important part. So the lot size, if you want to define standard lot sizes, you can do that by taking balance risk, setting it to 0, and specifying your static lot sizes here, which per default is a micro lot. The next setting, max lot size, tells you, defines the largest lot size that you are willing to take on any trade. Okay, and this is just a nice kind of a ceiling that you'll always hit. So if you're trading on the 1 minute chart and the size of the stop is really, really small, the position size can get enormous. But assuming that you don't want it to get enormous, you don't want to trade a 3 lot position on, let's say, a $5,000 account because the stop is 3 pips. Well, then you can put a ceiling, you can put a max lot size in here, and that will limit that. And I think it's a really good idea to find something you're comfortable with and put it in there, and then save that to your template. And then down here, as I mentioned, we have the balance risk. You can say, for example, well, I'm willing to risk 1% of my free margin per position. Then we have the stop multiplier and the target multiplier. And what this is doing is the stop sizes for the positions are based on volatility. So we're taking an average, a moving average of the volatility of the instruments on the time frames that it scans up here. We're multiplying that by 3, and that is the size of the stop, and that is the size of the target. Okay, so if you're comfortable with 3, that's fine. I think you'll find that on the 1 minute, the 5 minute, sometimes even the 50 minute, this is going to generate very tight stops, and so you might want to increase this slightly. But on the weekly, monthly, daily, 4 hour, this is just fine. That's plenty of space. That's plenty of buffer for these positions to start to work out. Pair exposure, how many positions per pair are we willing to trade? We're allowing only 1. Currency exposure, how many open positions are we allowing that contain, for example, the American dollar? Only 2. What about the stop multiplier? The stop multiplier is a setting that I've added to help prevent hemorrhaging in the situation that we have something that looks like a flash crash. So if we get into a position and price does not come back to the mean, it keeps going, and you hit your stop loss, the robot will see that and say, we just lost this trade on that symbol. Let's take the stop size, the original stop size, and multiply it by 2. So we go from having 3 times to 6 times. So the stop is twice as big. So we give it a lot more space to work out, a lot more buffer. Okay. Then we have no trading rules, and so here you can blacklist symbols and currencies. For example, I don't want to trade the Euro Swiss franc, comma, the CCC DDD pairs. And I don't want to trade the Thai baht, comma, or the Indonesian rupiah. So I just put that. I put the currency names, comma, currency names, and I put the symbols. And these are, as I mentioned, comma separated string values. Then we have some filters here. The filters here are related to swaps. If you only want to trade in the direction of positive swaps, then you can set these parameters here. You can say, that's true, I only want to trade, so I'm earning swaps. This is quite difficult these days. And the most expensive price I'm going to pay in swaps is minus 5 units of currency per standard lot. Okay, if you set this to 0, for example, then you will not be paying swaps on any position. But it can be quite difficult to find a trade. And so I would suggest if you're getting in and out your trades within a day or two, then it's okay to pay a little bit of swaps while you're waiting for these positions to work out. Then we have the trend. This is set to true. Then it's looking at the mean. It's only buying when the mean line is above the 0 line, and it's only selling when the mean line is below the 0 line. This is just a nice way to stay in line with the dominant trend. Then we have the magic number. And this is if you're running multiple instances of the software and you don't want one instance to be interfering with the trades of another instance. Okay, so this is pretty much how I'm running it. So I encourage you to download it, to get it going. Remember to download the historical data. This is absolutely paramount. Without good historical data, the EA is absolutely useless. Okay, so you have to remember to do that before you do anything else. Okay, and you do that again by going to your data grabber profile and dragging every single instrument that is denominated by the euro, the American dollar, the pound, the Swiss franc, the Aussie, the Kiwi, the Canadian, and the Singapore dollar. Every one that your platform has, so you have lots of data, and you drag it onto the chart. You make sure it downloads everything. Only when you've done that should you attach the EA to the chart. Okay, and I would recommend that you let the EA run on its own chart. There are no graphical objects, it's not doing anything, but I recommend that you just keep it on its own chart, just to ensure that other software is not interfering with the EA. That would be it also helps when you're trying to identify problems. Okay, but it works fine. It's very stable, this version of the software, so you should be good to go. Okay, well, I'm going to leave it at that. If you have any questions, please enter them in the currency strength reversion channel on our Discord channel. So jump in there, and if you're not in here, then please send me a PM with your email address at pipnotic.com, and I will add you to this group if you qualify. Okay, and when I say qualify, it means that you've been a member at Pipnotic for at least 6 months. And this again is because I want users of this EA to be familiar with the software and how it works and how it's been used historically. The histogram is essentially doing the same thing. It's just alerting us via some desktop alerts. The EA is actually opening trades based on that. Most importantly, I encourage you all to use this on demo accounts only. You can use it on live accounts, but you have to be careful, and you're doing so entirely at your own risk. And before you download this software, I want you to read the risk acceptance on the Pipnotic website in the main menu. Okay, and you have to read this, and you have to be aware of the risks. Okay, and so stay on demo accounts. Okay, stay on demo accounts. This is just a really nice way for us to learn about currency strength and how it's used and how it works and how it can be used so powerfully to identify the beginnings and the ends of cycles. It's a fascinating topic, and I encourage everyone to jump in and get on board with this software so that you can practice. Then what we'll do is, after about a month or two, when all the users are comfortable using it, well, then we'll have a trading competition using the software, and then we'll see how we get on. We'll see what kind of profits that we can do. And the reason I'd like to do this is because this encourages people to act in accordance to how they want to be as winning traders. If you trade with discipline, you have the tool, you have the robot, but you want to trade with discipline because you want to win the competition, well, then this is a really nice period of about 1 month. Let's say the trading competition is 1 month, and it'll be a really nice way to engage with the software, engage with the market, to gain lots of experience with the software using currency strength. Okay, good. 20 minutes. I'm going to wrap it up. If you have any questions, drop them in this Discord channel. Okay, and we'll start there. And again, thanks very much for watching.